Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 17, 2023. Stocks in Asia faced declines today as weak data from China raised concerns about the country's economic recovery. Additionally, the prospect of continued monetary tightening by the Federal Reserve weighed on investor sentiment. Mainland China's shares were hit the hardest as data revealed that the country's second quarter growth fell short of estimates. Economists surveyed by Bloomberg had predicted a growth rate of 7.1%, but the actual figure came in at 6.3%. The disappointing numbers led to a weakening of the onshore and offshore yuan. Despite market calls for more stimulus, the People's Bank of China kept its medium-term lending facility unchanged, causing further unease among investors. Fiona Lim, a senior FX strategist at Malayan Banking BHD in Singapore, attributed the fall in the yuan to evidence of a broad slowdown in the Chinese economy. She also mentioned the possibility of some consolidation in the currency due to a more favorable environment with Treasuries and the US dollar. South Korea's shares also saw a decline, while Australian shares remained steady. Japanese markets were closed for a holiday, and morning trading in Hong Kong was cancelled due to a storm. Looking at the US markets, contracts for the S&P 500 and Nasdaq 100 were lower in Asia. The rally in U.S. stocks hit a roadblock on Friday after a report showed that consumer sentiment had reached an almost two-year high. This reinforced the view that the Federal Reserve still has a long way to go in its efforts to bring down inflation. In the currency markets, the U.S. dollar showed little change on Monday after snapping a 5-day losing streak on Friday. Some strategists and investors suggest that the dollar's long bull run may be over. The yen, on the other hand, edged higher following comments by Bank of Japan Governor Kazuo Ueda, who expressed uncertainty about the U.S. and global economies. Yields on Australia's 3-year notes stabilized, while those on 10-year bonds saw a slight increase. The Australian dollar, which is sensitive to China's economic outlook, weakened. In other news, trading of cash treasuries was suspended in Asia due to the holiday in Japan. The 2-year Treasury yield rose by 14 basis points on Friday after the consumer sentiment report, contrasting the preceding day's decline in yields. J.P. Morgan Chase & Company strategists cautioned against prematurely declaring victory on inflation and expected elevated volatility in the near term. Federal Reserve Governor Christopher Waller stated last week that he expected 2 more rate increases this year to bring inflation down to the 2% target. However, if more positive data on prices emerges, the need for the second rate hike could be obviated. Swaps pricing indicates that the market virtually expects the Fed to raise its benchmark rate by another 25 basis points in the upcoming meeting, with a roughly 1/3 chance of another hike before ending its cycle. Oil prices extended their decline as China's disappointing growth figures and the resumption of major Libyan oil field output impacted the market. Gold remained relatively stable. Investors are starting the week with caution as they search for the next catalyst. The US dollar index, which tracks the performance of the dollar against a basket of major currencies, fluctuates below 100.00. European Central Bank policymakers, including President Christine Lagarde, are scheduled to deliver speeches during the European trading hours. The U.S. economic docket features only the Federal Reserve Bank of New York's Empire State Manufacturing Index. In early Asian trading, China released data showing that its real gross domestic product grew at an annual rate of 6.3% in the second quarter. While this marks an improvement compared to the 4.5% growth in the first quarter, it fell short of the market's expectations of 7.3%. Other data from China revealed a sharp decrease in retail sales, which grew by 3.1% on a yearly basis in June, compared to 12.7% in May. Industrial production expanded by 4.4% in the same period. China's National Bureau of Statistics acknowledged the improvement in the economy but also noted that the foundation of the domestic economic recovery is not solid. As a result, the Shanghai Composite Index fell nearly 1%, and U.S. stock index futures traded modestly lower. In the currency markets, the Australian dollar came under renewed selling pressure due to the mixed Chinese data. The Reserve Bank of Australia is set to release the minutes of its July 4 policy meeting early Tuesday. Euro to US dollar experienced its biggest weekly gain of the year, adding nearly 250 pips last week. The pair is holding steady above 1.1200 during the European morning. Pound sterling to US dollar edged lower on Friday but closed the week significantly higher. The pair is currently in a consolidation phase below 1.3100. US dollar to Japanese yen rebounded after a 6-day losing streak but is struggling to extend its recovery, trading within a tight range around 138.50. Gold benefited from the retreat in US yields last week, resulting in a gain of 1.5%. Currently, gold ounce per US dollar is relatively stable around $1,950. Bitcoin remained in a sideways movement slightly above $30,000 over the weekend, lacking a decisive move at the start of the week. Ethereum also experienced a slight decline over the weekend but managed to stabilize above $1,900 on Monday. Before we continue with our analysis, we'd like to remind you of your support for our channel market briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Key events this week. G20 finance ministers and central bankers are meeting in India, Monday. European Central Bank President Christine Lagarde speaks, Monday. U.S. Empire Manufacturing, Monday. U.S. retail sales, industrial production, business inventories, cross-border investment, Tuesday. Eurozone, UK CPI, Wednesday. U.S. housing starts, Wednesday. China loan prime rates, Thursday. U.S. initial jobless claims, existing home sales, conference. Board leading index, Thursday. Japan CPI, Friday. Some of the main moves in markets. Stocks. S&P 500 futures were little changed as of 12:21 p.m. Tokyo time. The S&P 500 fell 0.1% Friday. Nasdaq 100 futures were little changed. The Nasdaq 100 was little changed Friday. South Korea's Kospi index fell 0.3%. China's Shanghai Composite Index fell 1.1%. Australia's S&P ASX 200 index was little changed. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was unchanged at $1.1228. The Japanese yen rose 0.1% to 138.63 per dollar. The offshore yuan fell 0.2% to 7.1703 per dollar. The Australian dollar fell 0.3% to $0.6815. Cryptocurrencies. Bitcoin was little changed at $30,291.85. Ether was little changed at $1,928.40. Bonds. Australia's 10-year yield declined 2 basis points to 3.98%. Commodities. West Texas Intermediate crude fell 0.9% to $74.77 a barrel. Spot gold fell 0.1% to $1,952.78 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.